Most traders believe that somewhere out there, hidden behind enough study, enough screen time, enough effort, there is a place of certainty. You've felt that belief. If you could just understand the market a little better, if you could just find the right method, if you could just predict the next move with more accuracy, then everything would fall into place. The stress would disappear, the losses would shrink, the confidence would stay, and yet, the more you chase certainty, the more it seems to slip through your fingers. Inside the mind of a profitable trader, something very different is happening. There is no search for certainty. There is an acceptance of probability. This is where the transformation begins. You have to understand something that may feel uncomfortable at first. Every trade you take exists inside a field of uncertainty. No matter how clean it looks, no matter how perfect the setup feels, no matter how strongly you believe in it, the next outcome is never guaranteed. Your mind does not like that. Your mind wants to know. It wants reassurance. It wants control. So it starts building stories. This one has to work. It can't break this level. It's obvious what will happen next. And the moment you start thinking that way, you are no longer thinking in probabilities. You are thinking in predictions. There is a subtle but powerful difference. Prediction says, I know what will happen. Probability says, I don't need to know what will happen to win. The profitable trader understands that their edge does not show up in one trade. It shows up over a series of trades. Just like a casino doesn't need to know the outcome of the next hand to remain profitable, you don't need to know the outcome of the next trade. But you've probably lived through something different. You've probably felt the sting of a losing trade and immediately questioned your system. You've probably had a winning streak and felt invincible. You've probably adjusted rules after a few losses because doubt crept in. You've probably held on to a losing position because you were certain it would turn around. That emotional turbulence comes from expecting each trade to confirm your belief. When you expect a trade to win, you are attaching your emotional state to the outcome. And when the outcome does not align with your expectation, it feels personal. It feels like the market did something to you, but the market did nothing. It simply expressed one outcome within a range of possible outcomes. Inside the mind of a profitable trader, there is a quiet understanding. Losses are not evidence of failure. They are evidence that you are participating in a probabilistic environment. When you truly grasp this, something shifts. The need to be right begins to dissolve. The obsession with predicting begins to weaken. You stop trying to control what cannot be controlled. And in that space, clarity begins to form. Because once you stop demanding certainty from an uncertain environment, you free yourself from the constant emotional roller coaster. You start evaluating trades not by whether they won or lost, but by whether you executed your edge correctly. That is a profound shift. You move from outcome-focused thinking to process-focused thinking. And this is where many traders struggle. The mind has certain habits. It is wired to avoid pain and seek pleasure. So when you experience a loss, your mind immediately tries to protect you. It may tell you to hesitate next time. It may tell you to skip the next signal. It may convince you that the strategy no longer works. On the other side, when you experience a win, your mind may push you to increase size impulsively. It may whisper that you have finally figured it out. It may tempt you to bend your rules because you feel in sync. Both reactions are distortions. Fear distorts. Greed distorts. Overconfidence distorts. Denial distorts. You have felt that moment when a trade moves against you and your chest tightens. Your thoughts race. Maybe I should close it now. Maybe I should move the stop. Maybe I was wrong. That inner dialogue is not about the market. It is about your relationship with uncertainty. You have also felt that surge when a trade moves in your favor. The temptation to hold longer than planned. The urge to double down. The thought that you can't lose today. That too is about your relationship with uncertainty. The profitable trader learns to observe these mental reactions without being controlled by them. Observation is power. When fear arises, you notice it. You do not suppress it. You do not obey it. You simply recognize it as a natural response to risk. When greed arises, you see it for what it is, the desire to extract more than your plan intended. When overconfidence appears, you acknowledge that it is just as dangerous as fear. This awareness creates a gap between stimulus and response. In that gap, discipline lives. Most traders do not lose because their method is flawed. They lose because their mental distortions override their method. They hesitate when they should act. They act when they should wait. They cut winners short. They let losers grow. They abandon plans under emotional pressure. To move beyond this, you must cultivate mental discipline deliberately. This begins with clarity. A profitable trader does not operate on vague ideas. They have defined what constitutes an edge. They have written rules. They know what conditions must be present before they act. They know how much they are willing to risk before entering. This written structure is not about rigidity. It is about alignment. When your rules are clear and simple, your mind has less room to negotiate under stress. You are not asking, "What should I do?" in the heat of the moment. You have already decided in advance. You also need a clear understanding of why you are trading. If your primary motivation is to feel excitement, you will unconsciously seek volatility. If your primary motivation is to prove yourself, you will unconsciously take bigger risks. If your primary motivation is financial freedom, but you do not define what that means in practical terms, you may chase unrealistic outcomes. A profitable trader aligns their daily actions with long-term probability, not short-term emotional reward. This requires routine. You review your trades, not to judge yourself, but to gather data. You measure whether you followed your plan. You track your risk. You reflect on your emotional state. You refine, but you do not constantly reinvent. Consistency builds trust. Trust in your process reduces anxiety. When you trust that over a large enough sample, your edge will play out, you no longer need each trade to validate you. You simply execute. But execution only works when risk is fully accepted. Many traders believe they accept risk because they set a stop. But setting a stop is not the same as emotionally accepting that the money is at risk. You know you have not fully accepted the risk when you feel surprised or outraged by a loss. If you truly accepted it, the loss would not shock you. It would register as a normal business expense. Inside the mind of a profitable trader, risk is defined before entry. The amount at stake is small enough that its loss does not threaten emotional stability. Position size is chosen not to maximize excitement, but to preserve longevity. You are not trying to win big on one trade. You are trying to survive long enough for your edge to express itself repeatedly. Capital is not something to gamble with. It is inventory. It is the tool that allows you to participate in probability. If you protect it, it compounds. If you abuse it, it disappears. When risk is small and predefined, something interesting happens. You become calmer. You can let the trade unfold without constant interference. You no longer feel compelled to move stops impulsively or close early out of panic. You have already decided the worst-case scenario. And because you have decided it in advance, it no longer has power over you. With risk fully accepted, setbacks lose their sting. Losses become information, but there is still a critical step that separates growth from stagnation. How you interpret errors. There is a difference between a losing trade that followed your plan and a losing trade that violated your plan. The first is random variance. The second is a process error. If you do not distinguish between these two, you will either blame yourself unnecessarily or excuse behavior that needs correction. When you review your trades, you must ask one question above all. Did I execute according to my rules? If yes, the outcome is irrelevant. You reinforce the behavior. If no, you explore why. Was it fear? Was it impatience? Was it the desire to recover a previous loss? Was it boredom? These inquiries are not meant to shame you. They are meant to illuminate patterns. Every mistake contains insight. If you avoid looking at your errors because they feel uncomfortable, you rob yourself of growth. If you dwell on them with harsh self-judgment, you weaken your confidence. The profitable trader adopts a neutral stance. Curious, objective, compassionate but firm. You recognize that you are operating in an uncertain environment with a human mind that seeks comfort. You forgive yourself for being human, but you do not allow repeated undisciplined behavior to continue unchecked. Over time, this approach builds resilience. Drawdowns no longer define you. They become phases within a larger statistical journey. You understand that even a strong edge can experience a series of losses. You prepare for that possibility. You expect it, not pessimistically, but realistically. And because you expect it, you do not panic when it arrives. You scale your expectations appropriately. You measure performance over months, not days. You detach your identity from daily fluctuations. There is a quiet freedom in that detachment. You wake up without the desperate need to make money today. You approach the market with curiosity instead of urgency. You preserve mental energy by not fighting randomness. And something else begins to develop: patience. You are no longer compelled to trade constantly. You wait for alignment with your edge. You understand that not trading is also a decision. You resist the urge to manufacture opportunities out of boredom. Your emotional energy becomes more stable. You stop riding extreme highs and lows. You begin to experience what many describe as the zone. Not a mystical state, but a natural byproduct of clarity, acceptance, and disciplined repetition. In this state, you are present. You are not projecting into the future or replaying the past. You are simply executing what you have prepared to execute. The market moves. You respond according to plan. Win or lose, you remain centered. This is not the absence of emotion. It is the absence of emotional interference. Sustaining this state requires ongoing awareness. You continue reviewing. You continue refining. You remain humble in the face of uncertainty. You understand that mastery is not a destination. It is a practice. There will be periods when you feel aligned and periods when you feel off balance. The difference now is that you have tools. You know how to return to neutrality. You know how to reduce size during difficult stretches. You know how to step back when emotions intensify. You treat your mind with the same respect you treat your capital, because you have learned that the real edge is not just in your strategy, it is in your psychological consistency. Over time, the compounding effect of disciplined behavior becomes visible, not just in your account balance, but in your demeanor. You carry less tension. You react less impulsively. You speak about trading with calm clarity rather than frantic excitement. You have shifted from trying to conquer the market to cooperating with it. And perhaps the most powerful transformation is this: you no longer need trading to validate your worth. You are not your last trade. You are not your biggest win. You are not your worst loss. You are a participant in a probabilistic environment, executing an edge with discipline, accepting risk, learning from errors, and preserving mental freedom. Inside the mind of a profitable trader, there is humility. There is patience. There is structure. There is acceptance. There is resilience. There is quiet confidence that does not depend on immediate outcomes. When you internalize these principles, you begin to see that profitability is not a secret technique. It is a way of thinking, a way of relating to uncertainty, a way of responding to fear and opportunity without distortion. You stop asking, how can I be right more often? You start asking, how can I execute consistently over time? You stop chasing certainty. You embrace probability. You stop fighting losses. You integrate them. You stop reacting emotionally. You observe and respond deliberately. And as this mindset deepens, something subtle but profound happens. Trading becomes less about money and more about self-mastery. Each day becomes an opportunity to practice clarity. Each trade becomes an opportunity to reinforce discipline. Each setback becomes an opportunity to strengthen resilience. You evolve, not into someone who controls the market, but into someone who controls their response to it. And in that evolution, profitability is no longer a distant hope. It becomes a natural byproduct of who you have become. When you truly begin to see trading as a mirror instead of a battlefield, your entire relationship with it changes. At first, you may have approached the market as something to defeat. You wanted to outsmart it. You wanted to conquer it. You wanted to prove that you were clever enough, disciplined enough, fast enough to take money from it consistently. But the market is not an opponent. It has no awareness of you. It does not know your entry price. It does not know your stop. It does not care about your hopes, your fears, or your financial goals. It simply moves. Once that realization settles into your mind, something softens inside you. You stop personalizing the movement. You stop interpreting every fluctuation as a direct attack on your intelligence or a reward for your brilliance. You begin to see price movement as information, neutral information. From that neutrality, a different kind of confidence begins to grow. Not the loud, aggressive confidence that demands to be right. Not the fragile confidence that collapses after a loss, but a grounded confidence rooted in preparation and acceptance. You understand that your job is not to predict, it is to participate. Participation requires presence. Presence means you are not trapped in the last trade. You are not trying to recover what you lost 5 minutes ago. You are not fantasizing about what you will do with the profits of a trade that has not yet played out. You are here, watching, waiting, acting only when your criteria are met. There is a discipline in waiting that most traders underestimate. Waiting is uncomfortable. It forces you to sit with uncertainty without taking action. It exposes the subtle anxiety that wants relief through movement. You have probably felt that restlessness. You stare at the chart and think, there must be something here. You start convincing yourself that a mediocre setup is good enough. You feel that if you don't trade, you are missing out. But inside the mind of a profitable trader, patience is not passive. It is intentional. It is the active decision not to dilute your edge. Every time you pass on a trade that does not meet your criteria, you are reinforcing your standards. You are telling yourself that your rules matter. You are building internal alignment. And alignment creates peace. Peace in trading does not come from constant winning. It comes from internal consistency. When your actions match your plan, you feel stable. When they don't, you feel friction. That friction is not punishment. It is feedback. Many traders try to silence that feedback by ignoring it. They distract themselves with more analysis, more strategies, more indicators. They believe the solution is external, but the real work is internal. You must become aware of your beliefs about money, about risk, about success, about failure. If you secretly believe that losing means you are incompetent, you will struggle to accept losses objectively. If you believe that a big win proves your value, you will unconsciously seek validation through oversized risk. Your beliefs shape your reactions, and your reactions shape your results. The profitable trader has done the quiet work of examining these beliefs. You begin asking yourself questions that are uncomfortable but necessary. What does a loss mean to me? What does a win mean to me? Why do I feel urgency? Why do I feel fear? What am I trying to prove? As you answer honestly, you start uncovering the hidden drivers behind your decisions. This awareness is liberating. You realize that the market is not creating your emotional turbulence. It is revealing it. And once revealed, it can be addressed. You start practicing emotional regulation deliberately, not by suppressing feelings, but by normalizing them. You tell yourself, it is natural to feel nervous before entering. It is natural to feel disappointment after a loss. But these feelings do not control my actions. You separate feeling from behavior. That separation is the essence of discipline. You can feel fear and still execute. You can feel excitement and still follow your exit plan. You can feel frustration and still reduce size instead of revenge trading. Over time, this emotional maturity compounds just like capital. Each disciplined response strengthens neural pathways of stability. Each impulsive reaction weakens them. You are literally training your brain through repetition. This is why consistency is so powerful, not just for your account, but for your identity. You begin to identify as someone who follows through, someone who respects their rules, someone who acts based on probability, not impulse. Identity is powerful. If you see yourself as inconsistent, you will behave inconsistently. If you see yourself as disciplined, you will look for ways to reinforce that image. So the profitable trader intentionally builds an identity rooted in process. You say to yourself, I am someone who defines risk before entering. I am someone who reviews my trades objectively. I am someone who accepts uncertainty. At first, these statements may feel aspirational, but with repeated action, they become true. And as your identity stabilizes, your emotional swings begin to shrink. You no longer feel the need to prove anything to anyone. You are not comparing your results daily to others. You are not chasing unrealistic growth. You understand that sustainable progress is gradual. This patience extends beyond individual trades. It shapes your entire journey. There will be months where growth feels slow. There will be periods where results plateau. In those moments, your mind may whisper, maybe this isn't working. Maybe I should try something else. That temptation to abandon your path is strongest when you measure progress too narrowly. The profitable trader zooms out. You look at large samples. You look at overall behavior. You evaluate whether you are improving in discipline, not just profit. If your execution is improving, you are moving forward. even if your account balance has temporary fluctuations. This long-term perspective is what protects you from emotional burnout. Burnout does not come from losing alone. It comes from constant internal conflict, from fighting yourself, from expecting immediate results in an environment that rewards patience. When you align your expectations with reality, that conflict diminishes. You stop demanding perfection. You accept that you will make mistakes. You accept that drawdowns are inevitable. You accept that even with a strong edge, outcomes are distributed randomly in the short term. Acceptance is not resignation. It is clarity. With clarity, you conserve mental energy. You no longer waste energy arguing with what already happened. You no longer replay losses obsessively. You extract the lesson and move on. This ability to move on is one of the quiet superpowers of profitable traders. They do not carry emotional residue from one trade to the next. They reset. After a loss, they return to neutrality. After a win, they return to neutrality. Neutrality is freedom. It allows you to approach each new opportunity without the weight of the past. As this mindset deepens, trading becomes simpler. Not easier, but simpler. You define your edge. You define your risk. You execute when conditions align. You review your behavior. You adjust if necessary. You repeat. There is elegance in this repetition. It may not look exciting from the outside. There are no dramatic declarations, no emotional extremes. But inside, there is stability. And stability is what allows growth. Over time, something subtle shifts in how you experience uncertainty. Instead of seeing it as a threat, you begin to see it as the very reason opportunity exists. If outcomes were certain, there would be no edge, no risk premium, no reward. Uncertainty is not the enemy. It is the source of possibility. When you fully internalize this, fear loses its dominance. You no longer approach the market trying to eliminate uncertainty. You approach it prepared to manage it. You define what you are willing to lose. You accept that amount fully. You let the probabilities unfold. You stay consistent. This is the quiet rhythm of a profitable trader's mind. There is no desperation in it. There is no frantic searching. There is structure, patience, acceptance, and disciplined repetition. And as you embody these qualities, you notice that trading no longer consumes you emotionally. It becomes integrated into your life in a balanced way. You can step away without anxiety. You can reduce size without shame. You can pause during difficult periods without feeling like you are failing. You understand that longevity is the goal. The compounding of disciplined decisions over time creates results that impulsive bursts never could. In the end, the transformation is not just financial. It is psychological. You become calmer under pressure. You become more aware of your thoughts. You become less reactive. You become more intentional. And that version of you, the one who accepts uncertainty, who respects probability, who acts with discipline and reviews with objectivity, is not just a profitable trader. It is a stronger, more grounded human being. Inside the mind of a profitable trader, there is space. Space between thought and action. Space between outcome and identity. Space between fear and response. In that space, you find control. Not control over the market, but control over yourself. And once you have that, the rest unfolds naturally. There is a moment in every trader's journey when you begin to realize that the market is not testing your intelligence. It is testing your consistency. At first, you think that if you just learn enough, if you just analyze deeply enough, if you just refine your approach one more time, you will eliminate uncertainty. But what you eventually discover is that knowledge alone does not create profitability. Consistency does. And consistency is not a technical skill. It is psychological stability expressed through repeated behavior. You can have a sound method and still fail if you do not apply it the same way over time. You can understand probability intellectually and still sabotage yourself emotionally. This is why the internal shift is so important. You begin to recognize that your greatest threat is not the market's movement. It is your tendency to override your own structure when discomfort appears. Discomfort is inevitable. There will be trades that move close to your stop before working in your favor. There will be stretches where nothing aligns and you sit idle. There will be sequences of losses that feel statistically improbable, even though they are not. In those moments, your mind will try to protect you. It may urge you to widen the stop just this once. It may tempt you to take a setup that is almost valid. It may convince you that increasing size will recover losses faster. Each of these impulses feels reasonable in the moment. That is what makes them dangerous. The profitable trader understands that discipline is most important precisely when it feels hardest. When the discomfort rises, that is when your commitment to probability is tested. And here is the quiet truth. You do not need to eliminate discomfort to succeed. You need to function in alignment with your plan despite discomfort. That is emotional strength. It is not about feeling fearless. It is about acting correctly while fear is present. Over time, you notice something remarkable. The more consistently you follow your plan, especially during uncomfortable periods, the more confidence you build. Not because every trade wins, but because you are proving to yourself that you can be trusted. Self-trust is the foundation of stability. When you trust that you will follow your rules, you stop second-guessing every decision. You stop looking for constant external validation. You stop reacting impulsively to short-term outcomes. You become internally anchored. This anchoring changes how you experience drawdowns. Instead of panicking, you analyze calmly. You ask, is this within expected variance? Have I deviated from my process? If your execution has been consistent, you remain steady. If you identify behavioral errors, you correct them without drama. There is no emotional collapse. There is adjustment. This adjustment mindset keeps you flexible without being reactive. Flexibility does not mean constantly changing your strategy. It means remaining aware of your performance, your emotional state, and your alignment with your edge. You evolve gradually. The market itself is dynamic. Conditions shift. Volatility expands and contracts. But your principles remain stable. You always define risk first. You always act only when your criteria are met. You always review your behavior. You always respect uncertainty. These principles become your anchor in changing conditions. Another transformation begins to occur as you internalize this mindset. You stop measuring success by single trades or even single weeks. You start thinking in sequences and cycles. You understand that profitability emerges from repeated execution over large samples. This shifts your emotional focus away from immediacy. Impatience begins to fade. When impatience fades, impulsivity fades with it. You are no longer in a hurry. You are participating in a long-term process. That long-term orientation influences how you treat your capital. You no longer see it as a vehicle for rapid transformation. You see it as a resource to be preserved and grown steadily. You reduce risk during unstable periods. You increase size gradually, only when consistency has been demonstrated. You never let a single trade determine your emotional state. This steadiness creates sustainability, and sustainability is where compounding lives. Compounding is not just financial. It is psychological. Every disciplined action strengthens your mindset. Every objective review sharpens your clarity. Every accepted loss reinforces your emotional resilience. Eventually, trading feels different. It feels quieter inside your mind. There is less noise, less urgency, less inner conflict. You approach each session with preparation, not anticipation. You are not hoping for something dramatic. You are simply ready to act if conditions align. This calmness is not boredom. It is mastery over emotional turbulence. From this state, you begin to appreciate something subtle but profound. Uncertainty is no longer threatening because it no longer challenges your identity. You do not need certainty to feel secure. You feel secure because you know how you will respond, regardless of outcome. This internal security is the hallmark of a profitable trader. You are not immune to losses. You are not immune to mistakes. But you are immune to emotional collapse. And that immunity is built through repetition of disciplined behavior. There is also humility inside this mindset. You understand that the market can surprise you at any time. You never assume invincibility. After a winning streak, you remain grounded. After a losing streak, you remain composed. You do not chase euphoria. You do not spiral into despair. You stay centered. Centering yourself repeatedly is what allows you to sustain the zone over time. The zone is not a peak emotional state, it is a balanced one. It is the feeling of being aligned with your process. It is the absence of internal argument. It is the quiet confidence that comes from knowing you are doing your job. And your job is simple. Define your edge. Define your risk. Execute consistently. Review objectively. Repeat. The simplicity of this process can be deceiving. The real work lies in maintaining psychological alignment with it day after day. There will be life events, stress outside of trading, fatigue, distraction. In those moments, you may need to reduce size. You may need to step back temporarily. The profitable trader understands that protecting mental clarity is just as important as protecting capital. If your mind is unsettled, your decisions will reflect it. So you cultivate balance. You create routines that support focus. You rest when necessary. You avoid overexposure. You treat trading as a profession, not an emotional outlet. This balanced approach allows longevity. Years pass. Experience accumulates. You notice that what once felt overwhelming now feels manageable. What once triggered anxiety now feels routine. What once caused self-doubt now becomes simply another data point. You have not eliminated uncertainty. You have become comfortable with it, and that comfort allows you to operate with quiet precision. There is no need for dramatic declarations, no need to prove yourself. You are aligned with probability. You are aligned with discipline. You are aligned with risk management. You are aligned with growth. Inside the mind of a profitable trader, success is not a single moment. It is a state of being. It is the result of embracing uncertainty instead of fighting it. It is the product of acting consistently in an inconsistent environment. It is the quiet confidence of knowing that you can trust yourself. When you reach this state, trading stops feeling like a struggle. It becomes a practice of awareness, a practice of discipline, a practice of patience, a practice of humility. And through that practice, you become someone who does not depend on the market for emotional stability. You participate with clarity. You accept outcomes with neutrality. You learn continuously. You evolve steadily. In the end, the most profound change is not the growth of your account, it is the growth of your mind. You become someone who can stand calmly in uncertainty, someone who can act without attachment, someone who can lose without fear, someone who can win without arrogance, someone who understands that profitability is not about being right, it is about being consistent. And once you truly internalize that, you are no longer chasing success. You are embodying it. You are no longer reacting to the market. You are responding to it. You are no longer defined by outcomes. You are defined by process. And that identity, steady, disciplined, accepting, resilient, is what sustains long-term profitability. Inside the mind of a profitable trader, there is no illusion of control over the market. There is only mastery over self. And that is more than enough. As this understanding deepens, something even more subtle begins to take shape inside you. You stop trying to feel good before you trade. In the beginning, you may have believed that confidence had to come first, that you needed to feel certain, strong, motivated, inspired. But now you see that those emotional states are unreliable. They fluctuate. They rise and fall based on sleep, stress, recent outcomes, even conversations you had hours earlier. If your performance depends on feeling a certain way, then your performance will always be unstable. The profitable trader does not wait to feel confident. You act from structure, not emotion. Some days you will feel sharp. Some days you will feel dull. Some days you will feel hesitant. Some days you will feel bold. But your rules remain the same. This consistency across changing emotional states is what creates stability. You no longer ask, do I feel ready? You ask, are my criteria present? That shift is powerful because now your behavior is not controlled by your mood. It is guided by your plan. And the more often you act this way, the more your emotional fluctuations lose influence. You begin to experience a quiet detachment from internal noise. Thoughts still appear, doubts still arise, but they pass through your awareness without dictating your actions. You might think, this one looks too obvious, maybe it will fail. And instead of reacting to that thought, you check your rules. If the setup meets them, you execute. If it doesn't, you wait. The thought does not control you. It is simply observed. This level of self-awareness takes practice. It requires slowing down enough to notice your internal dialogue. You start recognizing patterns. You see how after 2 losses in a row, your mind becomes more cautious. You see how after 3 wins, it becomes more aggressive. You see how certain times of day influence your focus. You see how external stress leaks into your decisions. And instead of judging yourself, you become curious. Curiosity replaces criticism. You begin asking, what is happening inside me right now? Is this reaction aligned with my plan? Am I responding to the market or reacting to my own discomfort? These questions create space. And in that space, wisdom grows. Wisdom in trading is not about predicting the next move. It is about understanding yourself deeply enough to remain consistent in uncertainty. The more you understand yourself, the less surprised you are by your own reactions. And when you are not surprised, you are prepared. Prepared to reduce size when needed. Prepared to step away when emotions rise. Prepared to continue executing even after setbacks. This preparation allows you to navigate drawdowns with maturity. Drawdowns are inevitable. There will be periods when your edge underperforms. During those times, your mind may search for external reasons. The market has changed. This strategy is broken. Maybe I need something new. Sometimes adaptation is necessary. But often, the discomfort of drawdown triggers premature change. The profitable trader distinguishes between temporary variance and structural failure. You examine data calmly. You review execution carefully. You look for evidence before making adjustments. You do not react impulsively to short-term pain. This patience protects you from abandoning solid methods during natural downturns. It also protects you from overconfidence during strong runs. Because just as losses can cluster, so can wins. When wins cluster, the temptation to increase risk dramatically can feel overwhelming. You might think, this is my moment, I have momentum, I can press harder now. But inside the mind of a profitable trader, momentum does not override structure. You scale responsibly. You grow methodically. You understand that preserving consistency matters more than maximizing short-term opportunity. There is a maturity in that restraint. It may not feel exciting, but it feels stable. And stability is the foundation of longevity. As years pass, this mindset reshapes how you view success itself. Success is no longer a dramatic milestone. It is not defined by a single large payout or a specific account number. Success becomes the ability to show up consistently, to execute with discipline, to accept uncertainty without emotional collapse, to learn continuously without self-judgment, to preserve capital and mental clarity through changing conditions. You realize that the real achievement was never about beating the market. It was about mastering your responses. This mastery extends beyond trading. You become more patient in other areas of life, more deliberate, less reactive. You understand that many environments, not just markets, operate under uncertainty. And you know how to function within that uncertainty without needing absolute control. This is the deeper gift of trading done correctly. It refines you. It challenges your ego. It forces you to confront your fears and impulses. It demands honesty. It rewards consistency. And over time, it transforms you. Inside the mind of a profitable trader, there is no constant excitement. There is steadiness. There is clarity. There is humility. There is confidence rooted in preparation rather than prediction. There is acceptance of randomness without resignation. You no longer wake up hoping for a perfect day. You wake up prepared to execute your process. You no longer end the day celebrating or mourning individual trades. You end the day reviewing behavior. You measure yourself not by outcome, but by alignment. Did I follow my plan? Did I respect my risk? Did I remain objective? Did I act consistently? If the answer is yes, you consider the day a success, regardless of profit or loss. And when you string together enough of these days, the financial results begin to reflect the psychological stability. Not because you forced them, but because consistency allowed your edge to play out over time. In the end, what defines a profitable trader is not brilliance. It is not intuition. It is not secret knowledge. It is the quiet discipline of acting in harmony with probability. It is the courage to accept risk fully before entering. It is the humility to review mistakes honestly. It is the patience to wait for alignment. It is the resilience to continue through variance. It is the self-awareness to notice emotional distortions before they dictate behavior. It is the long-term perspective that values sustainability over excitement. When you internalize these principles deeply enough, you stop searching for external answers. You stop chasing new strategies every month. You stop blaming the market for your inconsistencies. You take ownership of your process. You become accountable to your standards. And in that accountability, you find freedom. Freedom from impulsive decisions. Freedom from emotional swings. Freedom from the constant need to be right. Freedom to operate calmly in an uncertain world. Inside the mind of a profitable trader, there is a profound simplicity. Uncertainty exists. Probability governs outcomes. Risk must be defined. Execution must be consistent. Review must be objective. Growth is gradual. Identity is built through repeated, disciplined action. That simplicity may not satisfy the part of you that once craved complexity, but it satisfies the deeper part of you that longs for stability. And as you continue walking this path, you realize something remarkable. The market did not change. You did. You became someone who can stand calmly in front of randomness, someone who can act without attachment, someone who can lose without fear and win without arrogance, someone who understands that the real edge was never just in the method. It was in the mindset. And once that mindset becomes your default way of thinking, profitability is no longer something you chase. It becomes something you sustain because it is no longer built on emotion. It is built on awareness, on discipline, on acceptance, on patience, on consistency. And that version of you, steady, grounded, objective, resilient, is the true expression of a profitable trader. Not perfect, not immune to mistakes, but aligned with probability, aligned with risk, aligned with self-mastery. And in that alignment, you find not only financial growth, but psychological freedom. That is what lives inside the mind of a profitable trader. And once you see it clearly, you realize it was never about conquering uncertainty. It was about learning to live and act within it.